All right, y'all. In this video, I'm going to share with you why having access to money is better than having cash in the bank. And I know some people are going to give some pushback on this. I know this is going to be semi controversial, but we got to get in here because I have too many case studies and too many examples for me not to share this information here with you. So let me just jump right into this training. Funny story is, I tried to do this training, live training, a week ago while we were in Puerto Rico for vacation, and it started off really good. And I was sitting outside, and the sun was hitting me, and I was glowing on the camera, and then it all stopped recording. I think I think the laptop overheated. So I'm happy to get back in here because I said, you know what? I'm gonna have to run this one back because the information is just too important not to share. So here's the deal: how we even got here. We were in one of our millionaire mastermind mentorship sessions over a week ago while I was in Puerto Rico, and we were discussing how to create some passive income through one of our passive income pillars. So we look at four pillars to create passive income. The first pillar is real estate, entrepreneurship, infopreneurship, getting paid off of your brand and your likeness and your expertise, and also to your traditional, non-traditional investments like your dividend stocks and annuities and funds, mutual funds, and things of that nature. So we were in this particular session, and one of our members said, "Man, Perry, I want to get into real estate, but I don't have any money." And it was a great teaching opportunity here, especially because we had several real estate investors in the room. Here's the deal, family. You have to stop saying you don't have the money to go out and make yourself successful. You have to stop saying that you don't have the money to invest in that business or to invest in that real estate or to invest in yourself. Lord have mercy. You have to stop saying that. Let me tell you why you have to stop saying that. Having money in the bank and having access to money is not the same thing. Let me say that again. Having money in the bank and having access to money is not the same thing. So what we was able to help our member navigate through where we were talking through this piece was, hey, you can invest in real estate and not use any of your own money. Right. So in her mind, in a lot of people's minds, hey, I want to invest in this business, or I want to invest in real estate, or I want to invest in this, cryptocurrency, or whatever the case may be. They think I don't have the money. You don't have to have the money, family. You just need to know who does have the money. So, where we were walking her through the different strategies she could use, because obviously, we're all familiar with some of the, more common strategies like, hey, you can go to the loan and ask for a bank. I use this example. How many people have college educations, right? College degrees that they did not receive a scholarship for. So we know the numbers. The numbers are just catastrophic, right? How many people have student loan debt? 100,000, 200,000, $250,000 in student loan debt. So they got that college education. They didn't have the money to pay for it. They got access to the money and they took out loans and things of that nature. So before we go any further, let me first clarify here. I am not pro debt. I am not, hey, let's go get as much debt as we possibly can. I'm not for that. But I am pro leverage. Pro leverage is if I can get access to capital and put those dollars someplace that's going to generate some cash flow, then I am going to be open to having that conversation. So let me go back here to our friend. So we're dealing with our friend inside our a millionaire mastermind program, our coaching program. And we started to share with her some different ways. So we actually had another investor who I said, hey, I'm going to share how I've used some different strategies, but I first want you to share yours, right? So we started going down this list of different ways to get access to money, right? And what my when one of our members shared was, hey, when we first started investing in real estate, we didn't use any of our own money. Matter of fact, we didn't even use bank money. And everybody's like, huh? So where did you get the money? Well, let me show it to you guys here real quick. Bear with me. Let me share my screen. Awesome. Okay, great. So what she was using, because we all know, right, when we if we need money, everybody thinks, oh, I gotta go to the bank, right? Or better yet, I gotta have it in my account. I can't start investing in real estate unless I have the money in my account to buy a bank to buy some real estate. Or I can go to the bank and ask for a loan. Well, what our friend shared with us was they got started in real estate using PML. What is that? That is private money. Well, you may ask, well, Perry, what is private money? Here's the deal. Regardless of where you are in your financial journey, regardless of where you are on the continuum of broke to wealthy, we all know people who have money. So whether it's that rich uncle, that cool auntie that's always rocking the furs, whether it's that college friend who went off to start a business and kill it, whether it's that colleague, we all know people who have money. Well, guess what? People who have money like to make more money. It's the craziest concept when you get your head wrapped around it. Let me say that again. People who have money like to make more money. So what they shared with us was they had a friend in the family who had recently received some life insurance proceeds. So had received, I don't know, let's call it $1 million, right? And they had those dollars sitting in a CD at the bank earning 5%. They went to their friend and said, hey, we're looking to purchase some real estate. We need an investor, and we are open to giving you 8%. All right, family, which one is greater, 5% or 8%? Easy math, the 8%. Well, the person was like, okay, I'm kind of open to it. I don't understand how it works. So, our friend went and got, the paperwork and whatnot. And the money they were borrowing from this person, they set them up just like they were the bank. Hey, y'all know our deal. Think like the bank, right? So that person who was lending the money now was helping them buy a property. So they had a lien on the property. So that's what gave the investor, right, a level of comfort to work with our friend, is because they knew if the friend did not hold true to paying them the 8%, that they would actually own the property. It's the exact same thing that the banks do with your mortgages, right? If you go get a mortgage on your property and you default on making that payment, the bank forecloses and now owns that property. So they did the same thing with a friend of the family, right? Then they went on to share with us, like, hey, after they did that deal, they start doing more deals. And now I think they're up to paying this friend 12% on their money. So their friend is making 12% on their money for short 6, 12, 18, 24-month loans. So they're getting a 12% interest rate on the money, which is, hey, by the way, if that money sitting in the bank is what, probably less than 1%, they are extremely happy, right? So here's the deal. So many times we think, I don't have it. Well, here's the deal. When you start to think like the bank, and this is what we teach inside our 5-day financial freedom boot camp, when you start to think like the bank, you start understanding that you don't have to have the money. You just need to find the people who do have the money, who want to make more money. This is a pretty easy transaction to sell. Like, this is not a hard concept. Hey, you got money. Hey, I'm looking to do a real estate deal. If I go, I'll go to my wife, Sarah. Hey, babe, I'm looking to do a real estate deal. Say, okay, cool. I need $100,000. Do you have $100,000 that you can lend? Because I'm willing to give you a 10 or 12% interest rate on that money. How many people would be willing to take that money out of their sorry checking account that's making less than zero, saying 0.01%, or that savings account that's making less than 1%? Or for some people, hey, this may actually present an opportunity for them to invest with less risk than being in the stock market, something that they can't control, right? Where they would be willing to do this. So here's the deal. Make a list right now. How many people do you know that you have a personal relationship? Because with a private money loan, this is a personal relationship. You ain't just going to some Yahoo on the street. This is someone you have a personal relationship with who want to make money. I remember I was looking to pay off a debt of mine. This was probably, I don't know, shoot, 10, 12 years ago. And I have a very, very close friend who is pushing close to being, a billionaire, more than halfway there. And I remember like, you know what, I'm just going to reach out to my buddy and be like, hey, man, I got this $50,000 debt I'm going to get off the books. I'd rather pay you the interest than pay it to the bank. Would you be willing to do the deal? Right. And the deal is just something happened where I ended up getting it paid off, so I didn't have to do that. But that's how I started to think. So again, if you're looking to invest in real estate or invest in a business, you may not have the money, but do you know who actually does have it? So that's what we mean by having access to money. When you have access to people in your network, you have access, potential access to their capital or their money that you guys can do a deal and actually make it make sense for everyone. Let your head get wrapped around that, family. All right, so let me go back to this other piece. So we have, obviously, we talked about you can go to the bank and ask for a loan. And then what I was sharing with the group is we have used hard money lenders in the past. We've used hard money lenders to acquire just under $1 million in real estate in about a year or so. Work with my wife, and people in the group say, "Well, Perry, what in the world is a hard money lender?" Okay, a hard money lender is kind of like a private money lender, but not. So a hard money lender is a institution or organization. But what these people have done is they have pulled together capital or cash from private investors and poured it into like a big pool. And then their deal is, hey, we're going to lend your money out. We're going to handle all of the paperwork, all the legal, all of those things. We're going to lend this money out. We're going to make sure that you're protected, that you have, a course of action if somebody doesn't pay the loan back on this property, and then they lend the money out. So now people, what I'm saying, just put their money into this bucket, and these hard money lenders or these institutions then do all the underwriting and things of that nature. And what we loved about a hard money lender is they weren't looking at us from a personal standpoint. They weren't saying, well, hey, Perry, because if you went to the bank, they're going to ask, they want to make sure you got to have the best credit score. What's your debt to income ratio? What's your mama's name? What's your blood type? How many children do you have? What was your degree in? All of these things. Or hard money lenders is less focused on you and more focused on the actual property. So with the hard money lenders, we have a great relationship with them where we can go in and they'll give us anywhere from say 90% of the acquisition of the property that we want to pick up, plus 100% of the rehab money. So what I mean by that is if we found a property, right, and let's say that we're buying a property at 100K, but we know the property is going to be worth, 200K, this lender may give us $90,000 to buy the property. And then, if we need, say, another, let's call it $30,000 to rehab it, we got a loan with them for 120,000 and we only had to bring 10% to the table. In that case, 10,000. Now, if we didn't have the 10,000, we could go ask somebody to borrow it, right? Because again, access to money is access to people who have money. You don't actually have to have the money. In this case right here, we actually borrow from our own bank. So this is now where we use our infinite banking strategy, or our own private bank that's made out of a cash value life insurance policy, and we borrow that money from our bank, right? And when we do that, we keep our money still growing inside the account. It's still growing inside the account uninterrupted, family, right? So if we got 20,000 inside the policy and we borrow, this 10 out, our 20,000 is still growing inside the policy. And now we have a policy loan, right, from the insurance company. So we go to this deal with the insurance company money, end of policy loan, and the hard money lender, we're in the deal with no money out of our pocket. Y'all getting this? It's never been about, do I have the money? Is, do you have access to the money? And in order to have access to money, you have to have access to relationships. Do you have relationships where you have a strong enough relationship with these people, a deal with you, right? So we use hard money lenders. My wife and I have also been private money lenders. We've lent money on restaurants and other business endeavors and things of that nature. So understand, family, when we're lending this money, we are becoming the bank. If you want to get more information, go to thinklikeabank.com. That is our website. Go to thinklikethebank.com. You'll have access to some other resources in there, our wealthy framework that we teach inside our financial freedom boot camp, right? Go to thinklikethebank.com right now, because this is what we teach. When you start to think like the bank, and and understanding that, hey, if I can get access to capital, oh, let me blow your mind real quick. You know what? Hard pause. Let me blow your mind real quick. Has it ever dawned on you that you're lending the bank money when you deposit money into a savings account? Has it ever dawned on you that they're then taking the money that you deposited and then lending that money out at a higher interest rate? So and people, when I teach this inside our boot camp, folks are like mind blown. So let this sink in for a second. Do you think the bank is giving you interest on your money because you're a cool person and they like you? You're just that sweet, and the bank like, you know what, Perry, you the homie. Let me go ahead and give you this 1% on your money, fam. I appreciate you. No, they're giving me 1% on the money because technically I'm lending them my money. They're taking my deposits, putting it in their on their balance sheet, and then figuring out how to lend that out. So they're happy to pay me 1% because they're going to turn around and charge me 6, 7, 8% on a mortgage, or 15, 19, 25% on a credit card. Whoa, let that sink in for a second, right? So that's why we teach, hey, in order to become financially free, in order to create real wealth, you have to start to think like the bank. So, and what we're showing you here is you can actually be on both sides of the equation. You can be, hey, I'm going to go to my friend and let them be the bank because I'd rather pay them interest than pay it to the bank. Right. And again, you need to make sure you structure it right, structure it correctly, make sure your paperwork's in order, that your T's are crossed and your I's are dotted, and make sure that you're protecting them and things of that nature, right? But why not pay the interest? Would you rather pay the interest to a family member or a friend, or to the bank, right? Because now you talk about creating, a wealth within the family. Why not let your family be the bank? That's the whole point of infinite banking. That's the whole point of what the Rockefellers did. They became their own bank. So the family would come in and borrow money from the bank and pay interest back to the bank. You can do this with your friends and family. Geez, y'all, it's never been about, do I have the money? It's, do I have access to the money? Do I have access to the relationships? So again, y'all, super powerful stuff here. When you start to connect the dots with this, you start to realize that you actually have, I won't call it an infinite access to infinite amount of money, but you have access to way more money that's in your bank account. And the and one of the number one barriers that stop people from investing is not having access to capital, because they think, well, I only got $2 in my account, I'll never be able to buy real estate. Did you come to somebody like myself who's a private lender and say, hey, Perry, I want to buy this property for, $50,000 over here. It's going to take, maybe $10,000 to rehab, and I'm going to do all the work. So I need about $60,000. Would you be willing to be my bank on this deal? How many people could you go and have that conversation with? Because you can't tell me, from the brokest person on the planet Earth to the wealthiest, we all know people who have money. And people who have money typically are in a position that they want to make more money. But we have to start thinking like the banks. Oh my goodness. Let me roll through my notes here and just make sure I covered everything here for you. All right, y'all. Let me ask you this question. We recently had my man, Mr. Anthony, come into our mastermind program, right? And he hit me up and said, "Hey, man, I got my money and got my $10,000. I'm ready to come into the mentorship program." I said, "Outstanding." So I had a conversation with he and his wife, and and learned that they actually had the money, but the money was inside some real estate, and they just got access to that equity, and now is using that equity to invest in themselves, to learn how to think like the bank, so they can take that $10,000 seed, plant that seed, and have a seven-figure harvest, a six seven-figure harvest, right? So again, I can't tell you, I can give you numerous stories. I remember we had somebody come through our program, and on their first call, we identified where they had access to over $100,000 of money they didn't even know they had access to. This is what we teach inside our boot camp, right? So you have your private money lending, you have your hard money lending, right? And I'll share this other. Let me go up and go back and share this other screen here with you, right? This is where you have access to money as well. We teach 4D banking. And you might be like, well, Perry, what in the world is 4D banking, right? So 4D banking is where you look at all of your current assets that you have, right? So you're looking at do you have a cash value insurance policy that you can borrow against? We'll call it CV insurance. Do you have a broker? So let me stop there. So with the cash value policy, you can get access to money via a policy loan, right? Be able to spell today. We love these loans right here because you can actually let your money continue to grow uninterrupted, get access to a policy loan using your money as collateral, and get access to a policy loan with, if it's structured the right way, does not have a required monthly payment. Woo! How powerful is that when you're looking to buy a cash flow generating asset or looking to eliminate some debt? Then you have, hey, how many of you guys have a brokerage account or an investment account? We're going to call this brokerage. We love this loan right here, this security based line of credit. This is a loan where you can actually get a line of credit based on what you have inside your brokerage account, based upon your stocks that you own. You own your Apple and your Google and your Amazon stock. Maybe you got money market funds in there. Did you know you can get a line of credit based upon that brokerage account, depending on the investment advisor that you're dealing with, right? So now again, your money continues to grow uninterrupted. You don't have to sell any of your stock and have a taxable event. You keep your money working for you. And now you can use this line of credit to go out here and produce some additional cash flow. So what if, the line of credit is at 6%, but you're going out here and you're lending the money at 16%? You still net 10% in the margins, thinking like the bank, but also too, your account continues to grow uninterrupted. So now you're making money hand over fist. Another way, right? When we look at our 40 banking, it's your real estate. It just blows my mind how many people we are so excited to say, oh my gosh, my home is completely paid off. I'm so excited. And I'm like, wow. So we have all that equity in the home, where you've been paying on this property for years, making extra payments and doing everything you could to keep the payments current, and you're not using that equity in a form of a HELOC or a home equity line of credit to then go out and create some additional wealth. Like folks talking about they're broke and they got equity, they literally got cash locked inside their house, locked inside their walls that they have access to, that they could go out and create some financial freeing passive income. Mind blowing. And then you have, retirement accounts where a lot of people don't realize this is that, depending on the way your 401k is set up, you may be able to access money via a 401k loan, which I love these loans, right? Now you're kind of limited on how much you can take, how much you can get, because typically you can only get 50% of your value of your 401k up to 50,000. But what's nice about these loans is that the principal and interest payment doesn't go to a financial institution, it goes back to you, right? So again, do you have, having access to money is better than having cash in the bank, because this is ultimately what happens. Let me help you guys from a mindset shift standpoint. If you have cash in the bank, and let's say that you have, your 10, 15, 20, $100,000, right? Everybody's different. You got this cash in the bank and you want to invest. Immediately, what you're going to say to yourself is, can I risk losing this money? Because this is all I have. This is all I have access to. I didn't know that I could tap into my, cash value policy. I didn't know that I could leverage my brokerage account and get a line of credit. Nobody educated me on what a HELOC is and how I can use those dollars. Had no idea that instead of cashing out my 401k and paying taxes and penalties, that I might be able to get a 401k loan. Or even when I left the company, I could roll that over to my own 401k and use that as a bank as well, right? So you didn't even know you had access to these things, and you never thought just to ask somebody who has money, hey, would you be willing to go in, go in and be my bank on this particular deal, right? So because you didn't know these things, nobody taught you these things, you're looking at your $10,000 in the bank, and it's like, I really want to invest, but I can't afford to lose this 10,000. So I'm just gonna have to pass on this opportunity to improve my financial situation. What if you could remove that barrier completely? If you could remove that barrier completely, knowing that you have access to capital to go out here and what we call bust a move, how more active, proactive would you be in finding opportunities to buy cash flow producing assets? I remember I told my wife, it was at the end of the year. I had just put some additional, I had just got some additional lines of credit, and had made some moves and things of that nature. And I remember going to my wife and telling her, "Hey, you got $300,000 to go shopping, right?" And we're not talking about going shopping for the Louis Vuittons or the red bottoms, and what I'm saying. She knew she had $300,000 to go shopping for more cash producing real estate, and that was none of our own money. That was using the home equity lines of credit. That was using the revenue from the business to get lines of credit. That was setting up our infinite banking policies. That was all these different areas that we have access to money to be like, hey, we can go out shopping with $300,000. And that's not even including the relationships we have with the hard money lenders or the other private money lenders we know. Family, don't let not having money in the bank be your barrier, be the thing that stops you from going out here and creating cash flow for yourself. It's never been about how much money you have in the bank. It's been about, do you have access to money? And that means, do you have access to relationships with people or organizations that have money? Because if you do, then literally you can wake up and be like, man, I have an unlimited supply of money. If you had an unlimited supply of money, how proactive would you be about going out and finding cash flow generating assets and businesses and real estates and investment opportunities to free yourself up from your 9 to 5, if you had an unlimited supply of capital? Man, I hope this was valuable to you. Make sure you like this, subscribe, share this with your family. Be sure you go to thinklikeabank.com and sign up for our next upcoming financial freedom boot camp so you can get more of this information, learn the system that we use with our clients, and we can't wait to see you on the other side of this money. Let's go cash flow. Peace.